How's it going? Welcome back. This is Jonathan, and in this video, I am actually going to be taking a look at the gold chart. Now, there's a few markets that I love to monitor, and gold is one of them, and I've been watching it for a very long time now. But if you haven't been watching the gold chart over the last, I would say, 4 or 5 days, you've probably missed out on one of the most steepest crashes it's had, at least in the last several months. Now, I'm going to be breaking this video into 2 bits. The first bit is I'm going to send you back in time to a live session that I did last month. And I'm going to give you inside access into what we do with some of our students and how we teach them and show them ways of thinking differently about the market and analyzing the market, okay? Now, I don't want you to focus too much on the actual content that is being shared in that video, but I want you to see just how important it is to have 2 potential outcomes for whatever you do in the financial markets. And gold is now going to be a cornerstone of why that should be the case, no matter if it's cryptocurrency, shares, Forex. You always need to have 2 outcomes. A lot of people you see on the channels, and this is definitely something that I learned when I was working with the Agora families, was that they always harped just one view. You need to have one view, you need to stick with that view, and you need to go and go and go. Even if you're wrong, you need to keep pushing that view. And that's because people tend to follow a certain belief. And if you can attract certain people of a certain belief, then you'll be able to sell your products, et cetera, et cetera, et cetera. I was always disagreeing with that model, and I always thought that it was best to have 2 potential outcomes as to what can happen, because you need to be ready for both angles of what the market can do, okay? You always need to be ready for option A, you always need to be ready for option B, and that is how you as a trader can take advantage of the market as it occurs. So let's go back, take a look at that video, and then in a few minutes we'll come back here and wrap up, and we'll move into part 2, and that's where we'll take a look at what happened and what it means moving forward. See you in a second.
I shouldn't say we're watching the gold market for well over 2 years now, because we put out some very major forecasts for this market. We did forecast the top, we did forecast this bottom, and these 2 bottoms were situated very, very nicely with a double bottom, also on time counts that we were producing. And then in our last major market update, I believe it was this time last month, we suggested that if the market comes down and touches this band and stays above it, well, we know the direction. And as we come back 1 month later, we know that we've had a very bullish run, and we're up around 7.5% in price of gold, which would equate to, 30, 40, 50%, those sort of gains in miners. So that's a very clear reason why we want to watch the gold price. If I go ahead and start putting on some Fibonacci, because I'm going to do some live analysis with you right now. Let's go ahead and do that. Pop this one on. Go ahead and squeeze these ones on. Easy. So we have some resistance in the market, and I'll go ahead and just start to jot these on. We have some natural resistance in the market. If we go from this high to this low, and if we follow this 38.2% level, we can see that over here in the past, we had congestion in the market. Now, that congestion in the market is a natural congestion level, and we know that now moving into the future because these bottoms have formed. What you'll notice is that the past helps you find the future well in advance. And I know it's getting a bit esoteric right now, but if you were to draw on your Fibonacci levels with past data, so if we were to move the chart backwards, for example, and we were to take these highs and sort of try and find where the market could fall to, what you'd want to do is you'd want to find prior support and resistance levels and start lining up Fibonacci and the Gann levels on them, so you can see how far the market could fall. So if we were to, for example, put the 50% level here, and this is just hypothetically to give you an example, and you were to do like maybe 5 or 6 of these, you can see that the 50% level hit these lows and hit these lows here. So you could put out your own little forecast that we could see 1640, and then you'd go and find other levels. So you'd put it out, we put the 50% level in this congestion area, and you could say, well, from this top, if the market is to run this low with these congestion periods, then we could get a low to around this level here, which we see did occur. To sort of play around with it and sort of prove this method to yourself. Oh, got to go off what happened there. Prove that method to yourself, because you're the only one that can prove these methods. So I'm just showing you off the cuff, you know, what's actually possible. The market has already dictated well in advance what it's going to do, and it shows you in the past what it's going to do. So I just wanted to give you a bit of esoteric learning there. So let's ignore that. So let's go and find out all our congestion levels. Those two look good for now. So if the market for gold in specific, go ahead and get my brush. If the market moves up, there's a very high chance it could find congestion in this level. And what we have here is we have an active trend, oh, I shouldn't say an active trend line, an active angle line. And if it falls below this active angle line, I reckon we could definitely get some support here. So I'm not going to go into any more analysis than just simply showing you how to do this yourself, because I don't want to confuse you right now. But what I wanted to show you was how to actually start to build your own little support and resistance areas. So, and how to think into the future about what could actually occur. So let's go back. If the market sort of finds some support here and moves up, I think that this area is going to provide a resistance level. It already did once, you know, it came up and sort of grinded against it. We're not looking for perfection. We're looking for a slight percentage off it. That's okay. If the market falls down, I think it could hit this line, and then it might bounce up, because this has sort of been running higher like this. But if it does fall below it, it could go down to here. That is your thought process that you should also be doing with every single market and every single cryptocurrency or stock that you actually get into. You want to know exactly what it is that the scenario for that market is going to be. I'm going to get rid of these because we'll have it on the recording, and I like to keep my chart clean. So if I go ahead and get rid of all this now, I can see that I have support and resistance levels right here. So this price support and this future resistance.
Okay, so in that last video, you're probably wondering what on earth was I talking about. And that's okay if you're new. But there's actually two lines that we drew on the chart, and those two lines are actually on the chart that is in front of us right now, as you can see on your screen. Now, it's pretty obvious that I was wrong. I was wrong in the sense that if gold was going to fall, I had a support level that gold may find support at, and it actually broke through that. That's pretty obvious. We don't need to sort of, you know, wonder if I was right or wrong. It's pretty obvious. I was wrong. But I wasn't entirely wrong, and here's what I want you to see. There was one major support level that I drew on the chart, and there was one major resistance level that I drew on the chart. But you can't just be looking at one or the other. If the market is falling lower, you need to catch it at every single point. It's like a staircase, okay? So if the market falls lower, can it find support there? If it doesn't find support there, what's the next stair down? What's the next stair down? Does that sort of make sense? So if we're looking at the gold chart right now, let me go ahead and just get a line right here. So if gold falls down, and if it stops at a support level, does it bounce or does it break through it later on? If gold falls down and it stops at a support level, does it bounce or does it break through it later on? If gold hits a support level, does it bounce and move up, or does it break through it and fall lower? You sort of got to move with the market. And there are several ways that you can actually forecast and predict exact lows. But if you are trying to, if you get like a massive break in the market, it is going to break through all support levels until it hits one that does activate. And there was one that did activate, and we did draw it on the chart in the video, and you may have actually seen this, but as a matter of fact, we didn't put it on this actual forecast for a potential support level, mainly because it was my oversight. But it was, if you go back to the other video, if you just go back in time, it was this yellow line right here. Now we can actually see back in the past, we had this one circled, we've got this one circled, and you've got this congestion level here, and then we have our Fibonacci retracement tool, which was in the last video as the flashback. I didn't mark this one because I thought that gold may find support at its higher support level if the tendency for the market was going to be bullish. Well, what we do know in this case, and sorry if I'm waffling a bit, I'm just trying to make a point. What we do know, if we just switch over to what actually occurred, well, the Fed hinted at raising interest rates. Now, if you raise interest rates, it actually makes the dollar stronger. And as an opposite of that, it can pull down commodities that are valued in dollars, because you're getting, now with a stronger dollar, you're able to buy more of a specific commodity. So that pulls the commodity down. So with the gold price heading lower on the news that the US dollar could be getting stronger and interest rates could be rising, which is completely cyclical. Interest rates are expected to rise in the second half of the grand cycle, which if you go back a few videos and you actually watch those videos, you'll see the grand cycle had two parts to it, and the interest rates generally typically rise in the second part of that cycle and they fall in the first part of the cycle. Not always the case, but generally, okay? So gold from here on out is expected to be slanted towards more the bearish side, but we can't say it's going to be a complete bear market unless the US dollar keeps going up. If it keeps going up, then gold, in sense of US dollar to gold ratio, is not going to be favorable. So that is what I wanted to just point out there. Gold fell on negative news. It broke through our support level, and then it hit another support level, which was there. We just didn't draw it in. Simple as that. So you need to always be watching both sides. Now that doesn't also mean that we were completely wrong, because we did the video when this, I believe it was this bar that was in the video, and it was pretty clear that if the market came up and hit this level, it could get a potential resistance band there before falling down. It was just in our case, we suggested that the support level around 1800 may be one to watch for, but as a matter of fact, it was one lower. Now, if you want to go back and watch that video several times, there was a secret in there which I did touch on. I said I didn't want to go too esoteric in the way that the markets work, but there was a secret as to how you can actually find which support and resistance levels are going to be stronger, and why you'd always want to just mark those on your chart and watch them. So if I was to wrap up here and just give you everything in a nutshell on what I'm trying to get at, it's this. Don't go into the market expecting it to do one thing and only ever having a bias to one angle. Analyze everything as a whole, and then when you get confirmation of the market actually doing something, you'll then start to switch your investment preference and style to suit that new market. When gold fell through, I believe we had a line that was going up like this. Whoop, gotta double click it. Where's my pencil? When gold fell through this line, you should have been not going bullish on the market and trying to buy the dip. You should have been watching for the market to find support. Now, until it found support, you do not take any action on the market whatsoever. You do not place any buy signals or anything, buy orders in the market or anything like that. You need to wait. That is simple technical analysis and rules-based trading. If it fell through that level, you need to analyze lower in price to see where the market may find support. And if it did find support around this level and then moved up, well, once you've got confirmation of any move up is when you actually take action. There's this whole theory about buying the dip, and it's especially, it's a virus in the crypto community. Every single dip that occurs in the market is something you should be buying, and that's what they really believe. I don't believe that. I believe that we need to buy on confirmation and not speculation, and that's what I was taught. And that means that we only take action when we can confirm with a certain amount of probability of what action is going to occur, that we actually then go into the market and buy or sell. Now, the market here has bottomed out by the looks of it here. I would be waiting to get confirmation around the 21st to 22nd of this month before I actually make any more decisions on what I want to do. Let's just say that the market came down, it bounced potentially over the next day or two and then moved up from there. That would give me confirmation that we may be moving higher. But all in all, now that this support level from the past has been drawn, it is now an instant resistance level to the up move. So as you may know, old support becomes future resistance and old resistance becomes future support. So until we can get a move above this, there is not enough room in the price of gold. We're talking 2 to 4%. There's not enough room in the price of gold for me to bother at all having a bullish bias to the market and punting or actually taking a gamble that the market is going to break through it. I would rather see the market break through this support level and stay above it. Resistance, sorry, not support. Old support becomes future resistance. So break through that now resistance level and stay above it to make any bullish bets moving forward. Okay, so that's all in all. Right now, I think that a level to be watching is definitely this old level here, which was, if we put on our Fibonacci level, was actually the 6.18 level. So this orange line here, if we open this up, it's actually the 6.81 level. You see, as I turn it off and on, it is flashing on the screen. And while that holds, we simply wait. What are we waiting for? One last time, just in case you missed it. Let's go ahead and, whoop, I want my resistance level on there. Let's go ahead and pop this and get rid of this. What are we waiting for? We're waiting for a move either above this or below this to see which way the market is likely to go. And that's it. There's no need, as I said, and I'll reiterate once more, there's no need to play in this section right here. There's no need at all. The margin is too small, and unless you've got a really large account, it's not worth your time. You're best off sticking to the sidelines, and if you don't have a position right now, sticking to the sidelines to see what is going to occur and then acting on what has occurred instead of trying to play this little game. That's all I have. I hope you got at least a little bit of new knowledge and information out of this, and I'll see you next time.